We are joined now by tech investor Paul Meeks, known, among other things, for running the world's largest tech and internet fund during the dot-com boom. He is now the CIO of Sloy, Dahl Holst. Paul, we've been doing this way too long because I actually interviewed you while you were still doing that job back in the late 90s.
I remember it well.
Yeah, when I'm looking at an average trailing PE in the S&P 500 of 95, not skewed by some that are super high, a median of 26. It is hard not to at least sort of conjure up images from the late 1990s. Is there anything in your mind that is comparable in technology between now and the irrational exuberance of the late 90s?
I think you've raised a great point. There's a lot of parallels and potentially dangerous, though I would say the distinguishing factors between then and now is, particularly in the tech sector that I follow so closely, you have companies that are staying private and becoming more mature before they go public. And there's a lot of scrutiny when they go public as far as pricing of deals. And so the companies are of a much higher quality. The fundamentals are much better. But I always worry about valuations. I invest in the sector with a value hat on.
Yeah, and whenever I hear two things, this time is different or you just don't get it, that makes my journalistic radar go up. And I'm not saying we're hearing that a lot. We hear it a little bit around the crypto commodities and Bitcoin, et cetera, but we are hearing it a bit. Do people have it wrong this time? Do they have it right? Maybe this time is different.
No, there's always going to be some sort of theme in which you think is a brand new area that has never had any comparables and stocks should be going up forever. Right now, the tech sector, at least as the end of last month, was 24% of the S&P. I would recommend investors, and here's a guy that's been looking at this sector for a long time, to be no more than neutral weight the sector in their portfolios and most likely underweight, and be very careful which stocks you pick.
So does Apple get included in that be careful list?
Apple is down substantially just in the last couple of weeks, but I still want to hear what they have to say. And of course, we only have to wait a couple of days for that. The stocks or the industry that I like most in the technology sector is semiconductors, because particularly some of the memory-based companies have come down, in my view, way too much. I think Micron is very interesting here. On the semiconductor capital equipment side, I like Applied Materials and Lam. And so the semiconductor industry within the tech sector are my favorites.
Is there anything that you just think looks just spectacularly cheap? I can't imagine there is, given the market rally, but you never know. Anything just look dirt cheap and ignored and unloved?
Well, yeah, I also run some portfolios that are non-tech related. And no surprise, as a contrarian investor, there's a couple of real estate investment trusts that now that we've had the 10-year yield pop up, they've been doing horribly. And as investing always goes, Brian, the pendulum can swing from grossly overvalued to grossly undervalued. And I think a couple of REITs, and this is coming from a tech guy, are very interesting here for the overreaction to the upside in rates. And also recently, the airline stocks have come under a lot of pressure. And I do think that those companies are better fundamentally than they've been in a long time. And I particularly like Alaska and Delta.
Bottom line is, it sounds like the headline of this interview is going to be noted tech investor says that tech is not the best place to invest right now.
Agreed. Agreed.
We'll leave it at that. We just wrote the headline. Paul Meeks, thank you very much. Of Sloy, Dahl Holst, also an adjunct professor at Western Washington. Paul, thank you very much. And always, folks, thank you for tuning in to Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.